uh, like let's understand a simple aspect. Okay, see, suppose like if you go to a daily chart, right? I mean, whenever we try to trade the daily chart, we just try to see that what is happening in the candles, right? So suppose uh, if we see, like suppose we are trading this, right? We are trading the Friday candles, isn't it? So before that, we need to check what the daily candle is doing. Similarly, we need to check any sort of liquidity is available, any sort of fair value gaps are there or not. Either the order flow is bullish, either the order flow is bearish, all of those things, right? So by this fair value gap, this bullish fair value gap, which was untested, unmitigated, right? The price is not actually tested this. So until this, or by just by this fair value gap, we have a narrative that the price is actually bullish, right? Because as we see, this low of this candle has not been swept. The price swept this low but didn't close lower. Again, the price what did, it created a low, but the Thursday's candle didn't actually swept the low, but what it did was it swept the weekly highs and the highs of this Wednesday high, right? And it closed an engulfing bar. So suppose if we are using this candle as a reference to trade this Friday's candle, right? So if the high has been swept, right? If the high has been swept off this and had price has closed below, so what is the most immediate uh, draw on liquidity? The immediate draw on liquidity is the daily low, right? And then this, and then this, and then this, right? But if the price fails to go below this low, fails to break below the low, and just what it does is just sweeps the low and then goes higher, because it has a very what do you say, a very bullish order flow, right? Because we have the narrative bullish, which means we are respecting daily fair value gaps, we are creating new fair value gaps. So there is no point of us actually keeping a bearish bias coming into the next day. Or so when is the time when we actually frame ourselves in a bearish frame of mind? It is when the price creates an order block or it creates a fair value gap, then only. So I always tell you that don't switch your bias when you're trading all-time highs until you're proven wrong, which means it has to create a bearish narrative, right? And how is a bearish narrative created? A bearish narrative is always created by creating order blocks, a sharp turn, or a CISD, or bearish fair value gaps, right? Those are the narratives for bearish price action. But until that, when we're trading this Friday's candle, what is the immediate draw on liquidity? The most immediate draw on liquidity was the daily low, right? So when the price opened, what it did? Let's go to the 4-hour chart and see. The price it did was the price opened here, right? It immediately dropped below the low, right? It immediately dropped below the daily low, swept the low, and rejected back up, right? It rejected back up, something like this. It created a bullish order flow. So now, when it created this bullish order flow, what are you supposed to do here? We are supposed to target this high, right? We're supposed to target this high, right? We don't actually have a clear bias as of yet. Still, we don't have a clear bias to target this highs, but the immediate high is obviously there for us, isn't it? So when this candle closes, see, there is no need to trade every time, right? There is, because sometime the market, the price actually consolidates, so there is no reason to actually trade all of those candles. So when is the perfect time to actually trade the markets? The perfect time is to trade the markets in a kill zone after the in the New York session, after 9:30 open or after the 10 a.m. open, right? Or before that, you can place yourself before that, looking all of these things. So here what the price did was, when this candle closed, and then this candle closed, and then this candle closed, what it did, we created this SMT here, if you see silver, the low has been like, it has not been swept properly, but it is there. All right, in the lower time frame we have an SMT with gold. 4 hour, in 4 hour we don't actually see it properly, but if you see this one, this low, and this, see this one, it has been swept, isn't it? So it creates what? It creates a sense of what? This is a way to understand that the market is trying to switch biases, right? So once the price switched bias in 4 hour, so let's see, the price closed really high, closed very bullish, taking out this high, isn't it? So if you go to the 1 hour, what do we see here? When this candle closed, this is what we created. This is the change in standard delivery. This is the order flow that we wanted, right? This is the order flow that we wanted. But after this order flow got created, this is the 9 a.m. close, isn't it? This was the 9 a.m. close. So objectively, what do we see? Where this is our trade window, isn't it? This is our trade window. So looking at the 4-hour chart, we are supposed to target which target? We need to be targeting this high, isn't it? This 4-hour high. Doesn't matter how your 1 hour chart close or how your 1 hour candle close. Our overall bias is bullish. Our 4-hour charts are bullish. So we just need to understand and keep profiling the 4-hour candles. And then if you just go towards my entry, that where I actually took my entry was after the NY open, we have this 10 a.m. open. When in 10 a.m. open, see, why would I actually come and trade this area? Because this area is a consolidation level. No, nothing will be respected. I will just waste my time trading this area, right? When is my perfect time to trade? My perfect time to trade is after the New York open, or after this, right? After the 10 a.m. open or whatever it is. So after the 10 a.m. got open, it created a very beautiful structure, which means the price created a fair value gap. It gave us a change to delivery. So what I did, I just used this fair value gap which was there, or I could have waited for this as well, but the structure was really bullish. So I just used this fair value gap to take my trade and then target 2 hour or 3 hour. Here easily I was actually targeting 2 hour. It actually tickled me and then it came down lower, but 3 hour is quite possible now because the price is creating very much bullish. And when it comes to stop losses are actually used by using protected lows, right? Where suppose forget about the long position. Suppose I enter my trade here, right? So when I actually enter my trade, something like this, right? My protected low will be this, right? But I know the structure is really bullish. So what I do is I use the body closures, or what I use is, this is an inversion somewhere. This is the inversion, right? So what I use is I use the candle which actually created the inversion of that body is what my stop loss is here. But this is a very good protected stop loss. This is a very conservative. This one is more conservative. This one is a very aggressive stop loss because it is just below the fair value gap. This is well enough, this is good enough, something. I mean, you need to have a proper like, what do you say, a proper way to understand that where the price cannot go, right? So after this CISD got created, I could have done what? I could have used, I did this only, I went break even, or I could have placed my stop loss just below this row, because this is the fair value gap where the price came in, tapped in and created a CISD, right? So this is the protected low now, right? So once the price went up higher, again the price went up here higher. So what I did was I just used my SL here, right? This is the protected low now. we have created this now, and see how the price is actually flying. This is what my TP is, around 3 hour, yeah, somewhere here. See, we have created this CISD again. So now after this change state of delivery, what is your protected low? My protected low is this one, right? So this is how you actually trail your stop loss. If you're trailing, if you're trailing, then you can do this. If you don't trail, just do break even and forget about your trade and just let it play. All right, that's the thing.